All right. Good morning. Welcome. Great to have you. Lots of stuff going on here in the market today. Yesterday was pretty calm. Not a lot of volume. You didn't really have a whole lot of triggers or signals. We are seeing it being very different here today. A lot of signals coming in here this morning. Want to go out, talk to you a little bit about some of the trades that are setting up. Carl went through some of those with you. But want to talk about those and then our current positions and what we're looking at with those. Let's start off with our current positions. TLT. Okay, TLT here. The Fed here, Fed minutes created that, or the Fed release created the strong kind of weakness here, where we came off of 108. We got a little bounce the next day, and it has done nothing but go down ever since. It's coming down into its main support area here. Let me show you here on the TLT. Okay, we kind of have some of this support coming in from this little modest upward trend that it's been in. Plus, we have support from this 105, 104 area where we had the Fed beige book that created the little bit of a bounce here in the TLT. Still expect the TLT to turn around. Still expect it to move higher here. The way we positioned it with the 3K to 100K challenge, it's kind of like our line in the sand here, and we'll just kind of see where this ends up for us. But I still expect it to have a nice little move, at least back up into the 108, 109 area before options expiration there. Let's take a look here at our candlestick challenge trades. Okay, ABX, we know what happened with that, with them releasing the shares. Right, we had some extremely bullish action. And then we had the share release here. We're bouncing off of 18. There's a little bit of money left in this. We may take it into the close here today. If it's not able to kind of get a little bit of a rally into the end of the day here today, we may just take off I think it's like 80 to $100 that's in there. We may just take that off and move on. With this type of news that it had with the share repurchase or the share distribution, basically liquidating their stock here a little bit. We've seen different reactions from different companies over the course of this year. Some companies have reacted very positively to it. Some have reacted quite negatively to it. With ABX, we see the gap down. It really hasn't moved since. And if it's not going to move, if it's not going to get that little rebound here by near the end of the day, we'll pull it off and look to fight something else here. XLE. Okay, XLE's been consolidating here between 87 and 86. On Friday, had a nice pullback, rallied back into the close. As Carl mentioned, much of the XLE is a little bit deceiving about the strength in the energy sector, as Exxon, its biggest holding, has been flying higher. But here with XLE, we have a couple things. We're in the money. So it really is not going to take a hard pullback or much of a pullback in the XLE for it to really appreciate value for us. At the same time, we're dealing with bearish candlestick patterns up around 87 and bullish patterns down around 86. Okay, so this 87, 86 area, we have this kind of dichotomy here with bullish versus bearish. We'll continue to hold the XLE here into today. If it does close above 87 here by the close today, we will pull it off. But in general, still expecting this to work and to move in our favor. There's some underlying weakness within the sector if we get out of some of the Exxons and Halliburtons. Very interested to see what the overall reaction here on Marathon is. You see me mentioning in the chat the bullish setup here for Marathon. Now, Marathon's not a huge component of the XLE, but Marathon reported earnings last night. Stock was trading up around 36, opened down below 35.5. if this thing's able to close above its 7-day moving average, we'll get a nice bull vibe signal here, and coming off of the trend rider with some pretty good news. Their earnings here on Marathon were pretty good, and then if you take out the hit that they took from their investments, basically they lost 7 cents a share simply because of their hedges on oil and some of the investment activity that they took a beating in, and so really their earnings were even stronger than what some of the headlines will show there. Okay, so that's XLE Marathon again. XLE only down another 30 cents. We're looking, if it can close below yesterday's open, there's still great potential here on the XLE, and I fully expect it to work. It's been a drag here kind of during this consolidation, but isn't going to take very much for it to really appreciate. And we're looking for it to come down towards the lower Bollinger Band if it breaks down. Come down towards the lower Bollinger Band, wherever that might be, whether that's 84 or 85, depending on how long it takes to get there. Okay. Now silver, okay, and the SLV, and this is one where we sat last week on Thursday afternoon, silver down around 21.10, and we had the gap down, so there really wasn't a place for us to get out. And made the decision to hold on to the SLV instead of just taking it and moving on, knowing that it was going to be frustrating for 5-6 days because it probably would either bleed lower to flat, but it is in a major support area, and it's something that one decent day, you see how volatile silver is. It's extremely volatile. Overall, we need 20.5 to hold, but if 20.5 breaks, we're probably not going to have any value left in the options anyway to really move on there. So with silver, we're going to be expecting some sort of movement Thursday and into Friday with the ECB, with the U.S. jobs report. We don't get that movement here into Thursday, Friday. We sit flat. We'll probably just take it and move on there, but that's kind of how we're looking at those positions here. With the ABX and the TLT, we don't really have a lot of dollar risk left in those. SLV, we do have some. The XLE, we do have some, but we don't have a huge dollar amount that can be eroded from this point. We've taken most of those hits on them. And so we're really kind of looking at saying, all right, what are the next trades? We'll kind of manage these as they go. And, instead of adding more to silver, more to XLE right here, we're looking at saying, all right, where can we put our money to work to get some real nice movement? So I want to go through some of the trades that we're watching, but I want to put them in a little bit of a context here for you. Before I do that, Deb, you just joined the challenge yesterday. Yeah, the current challenge where we're at, we've just not had a good challenge this last challenge. We're down. We're probably gonna be, unless we get real lucky with the TLT, we'll probably end with a loss here on this challenge. Okay, we do have a new challenge starting on the 15th of November. Something we're excited for, and we've had two challenges in a row where. The last one we made 3,000, but it was a lot tougher than that. And then this one just not really ever getting off the ground. But we're heading into November. Our November challenges have typically been pretty strong. We have high expectations, but it's like anything. We obviously past performance is one thing, future performance is another thing. And while we're expecting a lot of strength and a lot of good things, we'll have to just see where that goes. But that'll be starting November 15th. November 15th. One nice thing about starting it right there, we'll be trading pretty much through some of the light volume Thanksgiving time, which tends to be quite bullish So we should be able to have a good start during that period with some of the seasonal effects that we'll see there. Okay. Spent a lot of time here. I've been off the live trade seat, Friday and then today, or excuse me, then yesterday. But it doesn't mean I haven't been watching the charts or doing my homework or really engaged and involved in what I'm seeing and what I'm watching. Sometimes I step away just a little bit because I just to get a clearer picture. It's one thing to be talking stocks; it's another thing to be kind of getting a picture of it. As you're just kind of watching it. Couple things I want to point out that are really interesting about this broader market. Okay, we have things like the bullish percent index. Okay, which those of you who know me, I love this indicator. It hasn't been the greatest indicator in the world over the last year, but it's squarely bullish right now. The bullish percent index. It would need a drop to about 77 to turn bearish. Okay. But one of the things that we have going on within this indicator is a little bit of negative divergence, where in July and May we had higher points than where we are now. Our highs are getting a little bit lower. That just speaks to the nature of the strength of the rally back here in May. It doesn't really speak to any weakness in the current rally right now. It's just not as strong as it was in May, and that speaks more to May than what it speaks to what we are seeing right here. While we have the bullish percent index in a bullish position, we have the S&P 500 for the first time really breaking down below the 7. Okay, really making that breakdown below the 7. And one of the very interesting things is yesterday we had most of our sectors still trading below the 7. The financials, okay, energy was the lone exception, but now today trading below the 7. Industrials trading below the 7 now after today, after this little tri-star bearish pattern. Utilities push below the 7 today. Consumer staples pushing below the 7 here today. Consumer discretionary pushing below the 7 here today. So, this gap down this morning and then a little bit of follow-through selling right here is extremely bearish from a risk standpoint here in the market as far as making a lot of these things drop down below their 7s. Now, one of the other things that's happening here is we are seeing a number of stocks, and in fact, here is the list. Okay, 45 of the S&P 500 stocks are trading with an MFI above 80. Last week we talked about the MFI and being kind of like the RSI on steroids, and above 80 is severely overbought. And we are seeing an unusual percentage of stocks trading with an MFI above 80. Now, a lot of that speaks to the strength in the market, but it tells us, what, we are in that overbought area. Any sort of bearish candle price action, we can go after. One of the things that we kind of like about Intel here, okay, potentially shorting Intel. Let me put the money flow index on here. But we have an MFI trading above 80. Now, I bring up Intel because the MFI has been above 80 since October 20th. Okay, since October 20th. And it really hasn't gone up or down. It had a little up, a little down, but nothing major in the overall trend here. So just because the MFI is above 80 doesn't mean it has to come down, but it's rare to see stocks move significantly higher when their MFIs are above 80. It's a little more common for that to happen with small caps, but with some of the large caps and the S&P 500 stocks, to see them move higher with the MFI above 80 is quite a rarity. And we're just seeing a ton of these stocks trading with MFIs above 80. Take a look at FedEx here. Okay, here's FedEx, and it's been strong, right? It's had good earnings and everything else. MFI well above 80 here. Some of these volumes have come in. Okay, doesn't mean it has to go up, but a lot of or down. But a lot of times you'll see either some flat trading to some corrective trading happen when the MFIs are above 80. Okay? So while this market hasn't been really shortable from an aggressive standpoint to get aggressively short, with 10% of the S&P 500 stocks trading with their MFIs above 80, and with almost every sector within the S&P 500 breaking down below its 7-day moving average, that throws huge warning signs of a strong correction to come. And what do I mean by strong correction? Well, normal corrections are 3 to 5%. Okay, they're 3 to 5%. If we correct on this market here, we're looking for a pullback back to about 1730, 1720, back down towards September's highs. Okay, this would be the support area here. Okay, that would mean the market went from 1770 down to 1730. That would be a normal correction. Okay, we're talking about a 3%, somewhere in that area type correction. If we come all the way down here to 1700, we're still talking a normal correction for the market to come back into these retracement areas or back into these August and September highs. Now, will it go straight down there? No, not necessarily. I mean, there's obviously going to be news catalysts that are coming out here with the ECB, with the jobs report, and whatnot. But the overall action here is just screaming toppy. That it's very, very toppy. Doesn't mean all stocks have to go down. Okay, but in general, we see some of the bearish follow through come in here today. Definitely be a nice place to jump on to various things. Take a look at something like ADI. Okay, here's ADI and has this hanging man candlestick on Friday. Gets the bearish follow through yesterday. Today gaps down with the market going up or going down. ADI's pushing to the upside. Okay, and this is common out here in the market. And the bulls aren't going to go. They're not going to go quietly. It's going to take some confirmed breakdowns across the board, for the bulls to really step out and to be out of this market. The other thing I wanted to show you here, the McClellan oscillator. The McClellan oscillator is a kind of a market breadth indicator that shows the strength, the overall strength in the market. And there are two. The one I bring up here, $NYMOT. This is the traditional McClellan oscillator. The $NYMO is more adjusted to trade within minus 100 and 100. Okay. And let me just pull off all of our indicators. I'll show you kind of what this tells us. And I'm going to just add the price of the S&P 500 down here to the bottom and annotate this. Okay. McClellan oscillator, typically when it's trading up above 60, is showing that the market has been really strong, and we may start to see a little bit of a pullback, but it's not a great topping signal. Down here below 90 and 100, well, really even below minus 70. Okay, market's pretty weak. The advancers versus decliners, we're seeing a lot more stocks falling than rising. And what's very interesting in this current market right here, okay, we're dealing with a McClellan oscillator that's at 0. So we're talking about a market that's been screaming higher and a McClellan oscillator that's showing, there's just as many stocks going up as going down. And that, this kind of erosion here is another thing that's kind of saying, this market's a bit toppy. This market's quite toppy. The other piece of erosion that we started to see last week was counteracted a little bit yesterday but we started to see the small caps underperform the market last week. Okay, they outperformed a little yesterday. They're kind of in line today, but we start to see these small caps break back down below 109 and more particularly 108. See them come down here to the 107, 106 area would be highly likely there for the IWM. So I'm just taking a look across the board as the market's been selling a little bit. Okay. So we're seeing a bunch of erosion here within the market. So let's go look at some downside plays. Um, Before I do that, Sobo, you mentioned TXT, Textron. TXT, it's up here around its resistance area. It's not an area that I say, oh, TXT can't make it through, but it's an area that you'd probably expect 1 or 2 weeks of consolidation here for it. For the bigger trend here on Textron, just on the weekly, this is in a very bullish consolidation. Okay, an extremely bullish consolidation. The resistance here at 29 broke out earlier this year. The lows continue to get higher, so it's in a very bullish position. But for it to bounce between 28 and 29 for another 2-3 weeks, it very well could. It hasn't really broken out just yet at this point. Okay, so market weakens, Textron will obviously have some sort of pullback, probably down here towards the 28 area, which would be probably a pretty nice area to buy it. Carl mentioned this morning with the market up 25% this year, the buyers are going to want to step in, and absolutely, we get a little 3 to 5% correction, that doesn't really have much of a catalyst. Buyers will start to step in as they do some window dressing into the end of the year. Now, as far as potential short plays, okay, this morning on chat I mentioned Bank of America, okay, the financial sector in general. Okay, financials here in general. Let me kind of show you trading below their 7-day moving average. Okay, it's been now for 3 or 4 days that it's been doing that. We would expect it to kind of continue to bleed lower back towards this $20 area. Goldman Sachs had been the strength in the financials. Very interesting action on it today as it broke down below the 7. Open today below the 7-day moving average. That's very bearish action on Goldman, and something we may look to go after here, even just a little bit later this morning. What I want to see, because to go after a bearish position here, what I want to see is that the market isn't going to hit bottom here in the next 20 minutes and rally as the European markets close, which is what we've pretty much seen on a day-to-day basis. So I want to make sure that we're not going to see that, and then I'd be okay, a little more aggressive to go after some of these potential short opportunities. Okay? So Goldman Sachs on the short side is setting up very interesting for that type of play. The other one that's just in a great position, and every day as I look at it, it's not is this bearish or bullish, it's is this ready to break down. And this is Caterpillar, and Caterpillar earnings were pretty lousy. They were pretty lousy. We're getting a little consolidation down here below. At this point, we could enter puts and use 84 as a stop and looking for 82 as a short-term price target. So the risk reward sets up very nicely here for the downside on Caterpillar. Take a look here at CF. Okay? CF Industries, and this is one that was trading. They had earnings yesterday. Was trading down after those earnings. Had a little bit of a flush. Now has this little bullish dragonfly candle here. Okay, if it's not able to hold, okay, if this bullish dragonfly is not able to hold here today, that would have some very bearish implications as far as an island reversal here. Okay, as far as an island reversal, we're also seeing some negative divergence within some of the technical indicators, and so CF potentially as the day wears on. If we stay in that sector with something like potash with a Harami action here today, or Mosaic, okay, which went up, hit the upper band this morning, now weakening, breaking back below the 7, and trading lower here. Just setting up very well there. The other area that, as far as bearishness, and it's some of this healthcare group. We saw the healthcare group break down. All right, we talked about some of these last week, and all right, they were starting to make some of their bounce, and they've made some of their bounce. Like here with Aetna, they've made some of their bounce and starting to pull back here. We start to see these things break back below their 7s. They would be very nice short opportunities here, especially on things like UNH. They had major breakdowns back here in September, have had low volume rallies. These would set up very nicely here, and kind of gives great trade opportunity to them. Humana, another one. This thing breaks back below the 7. We'll have something there. Yeah, St. Jude here. Yeah, St. Jude. This is one of the just one of those market situations where you have everything bullish, right? Everything bullish. You wake up to a downgrade, and because St. Jude isn't really heavily traded, it's going to pull back. It's going to pull back pretty strong. Um, yeah, I'm curious to see how DGX does here. ISRG. Okay, ISRG is one that has really been trading between this 370, 390 area. When does ISRG finally get a little flush breakdown? We've also talked about Medtronic in that same group as STJ. Medtronic here. I have a note on my wall on my board here that says buy if it breaks 58, and we'll see if that happens. But yeah, the whole sector getting weighed on here a little bit here today. Matt, good question. Matt says they have a huge buyback on Caterpillar. Is that what keeps it above 82? Yeah, I mean we've seen that happen here as it's broken down. Even when the market's been down on some of these days, Caterpillar will go up. We've seen that happen as far as it finding that support. What does that tell me? That just says that, hey, you know what? They're buying things back. We don't have any confirmation of that, but that's typically the most common reason. Sure, no problem, Matt. No problem. Sorry, just scanning through my board here. This, as I went through things yesterday after the close, Kihu was one that just kind of popped out at me. Vibe bull signal yesterday, Friday even. I know we've talked about some of these high flyers and some of maybe the Baidu, Sohu, Cenas, they're ready to stop moving. But we're seeing some underlying strength in Kihu that continues to hold. Beautiful MACD setup here, good volumes. The options are a little bit expensive. We have some resistance up here above 90, but not on major volume. And for a stock that's now been consolidating for 2 months, is showing potential breakout signs here. While some of it's not competitors, but some in the same group, like Baidu, Sohu, finally getting pulled back pretty aggressively, and then Kihu's just holding up very well in the midst of that and setting bullish signals in the midst of all those selling. That bodes very well for Kihu overall here. And so from a bullish perspective, one of my favorites. Another one here is Costco. Really breaking out above 119 here. Okay. Good volumes in play. Real nice breakout happening. It's just a matter of, okay, yesterday, a little too far away from the 7. Let's get it to come back down towards the 7, maybe consolidate a day or two, and then take on Costco to the upside. The other one on the downside is Ford. And Ford here has been very interesting. It had its earnings right back here in late October. Gapped up, had a major breakout, had every reason to follow through and didn't. Has failed, has gone lower. Major negative divergence within some of the oscillators. Okay, major negative divergence here with some of these oscillators. It's at one of those points where if this market corrects 3 to 5%, this could have one of those flush type breakdowns where it breaks back down towards the 200-day moving average and gets down towards that level. One thing that makes me a little nervous about Ford is we're seeing GM hold up in the midst of this. Okay, so we see this market maybe have a small pullback. We see Ford start to break back above the 7 and not have any downside follow through. Instead of going after Ford to the upside, GM to the upside and playing this up to the 40, 42 level would make a lot of sense here. Let me show you one other thing here, and let me go to my range here, and I'm just going to go 10.01. Just going to look at a 2-month period here. Let's do it for the broader market. Just take a look here at the S&P 500 during the month of November. Clear out my indicators just so we can see it a lot easier. All right. So here we are. Last year, month of November. Okay. Pretty strong pullback here. 1435 down to 1350. And pretty strong pullback right away. Very nice rebound. We tend to see bullish activity here late November. That tends to be something seasonal. So to see some sort of 1 week, 1.5 week pullback in this market, followed by a nice buy opportunity. That's really what we saw last year. Take a look here at 2011. Okay, we have the same thing. Early November pullback, late November rally. Okay, this is more common than not, and so it's something we are looking for here. With so many stocks overbought, to see a 3 to 5% correction followed by a real nice rally be very common. So here's November 2010. Okay, a little bit different, but we have this mid-November pullback. Okay, end of November into December rally. You kind of see the pictures. The pictures are about the same each and every year. We can keep on going back. We keep on going back. Let's take 2009, which was more of an anomaly year. Okay, 2009 was kind of the markets at that major bottom in March. Okay, the pullback came a little bit earlier in 2009. It came kind of during earnings season, and then ripped higher. Okay, in November. And let's just go to 2008 and 2007 and show you. And I show you that simply because 2008 was the Lehman debacle. Okay, but even with the Lehman debacle, we saw sell-off and hard rebound. Okay, into late November. 2007. Okay, 2007, same thing. Now this is the year the market topped in October, pullback here in November, beginning in November, mid-November, strong rally, end of November. Okay, this is just a common pattern we see in the markets, and it's such a seasonal trend. There are a lot of reasons that people will argue with why, but it's the price action that we typically see. 2006 wasn't as much. It still had that late November rally, but that's really from a market perspective where the market is. at this point, we'd be looking for November to start a little pullback here. We have some potential catalysts, but a pullback here in the market. Then we get some sort of pre or post Thanksgiving type of a rally here in the U.S. Is what we would expect to see, and to play there. Okay, so it's one of those things from a seasonal standpoint. One of the reasons why we chose to start the next challenge here, November 15th, because it's a little bit more predictable. You take out some of the headline risk, and can get off to a real nice start. Those of you who were on the challenge last November when we kicked it off, you remember it was a real nice start. So we'll be looking for that here again. One thing we are going to do here ahead of the challenge, the November 15th challenge, is we are going to have what we're going to call Education Week. We're going to have 10 classes that are basically soup to nuts about options, trading options, pricing options, Greeks, Vibe Trend Rider, kind of basically taking the education portion of this and turning it into 10 classes that will all be recorded. They will all be in the live trade seat in a separate area for playback. But a lot of that will be because we know that a lot of people will be jumping on for the next challenge, and then some of you have requested some more training in some of those areas as well. So we're going to kick that off next week, and it will only be it'll be 30-minute training during the market and 30 minutes after. And then all those will be recorded. So those of you that don't want the basic options, you don't have to worry about it. But those that do, it'll be in there for you. Okay. All right. So before I hop off here, I want to just quickly kind of go through some things here. Go through the charts here a little bit. Some of the setups that was looking for. Here's the S&P stock futures. Okay, and this is kind of what it's talking about, the morning sell-off, and then we hit bottom early in the morning and start to rally. This has been the common theme, what we have seen almost every day. So it makes it tough to take a bear signal in the morning and want to go after it right then. Today is a little bit different, in my opinion, as we're dealing with a little bit more of an overbought situation, and stocks like, let me pull it up here, stocks like Tesla, which opened up significantly higher and are now pulling back. Some of these strong high flyers, Google breaking the 7 here, seeing some of the strength come off of them. Amazon, I think is quite telling as far as where this market overall wants to go. Starbucks is a very interesting stock here after their earnings, which were pretty good. But you can play this thing long with an 80 stop, or if you want to get short Starbucks, you wait for it to break 80. So this 80 mark is a pretty key level here for Starbucks, and those looking for upside exposure, I'd rather be in Starbucks to the upside than many other things. But some interesting setups there as well. Sorry, on my other screen, I'm just kind of scanning through some of the stocks that I was looking for. Okay. There's some nice breakdowns with Intel, but there's just not enough here on the morning, with the morning still bouncing up here. If we start to see the market come back into the opening area and start to weaken up here, we'll take a look at a downside entry. For now, though, with the market kind of bouncing a little bit and whatnot, this Costco, something like this, if it kind of would make a lot of sense to the upside, and the Keyhoos that are just pulling back slightly off of yesterday. Best Buy, Aaron. Best Buy here, it just has been on a monster trend. Just a monster trend, good volume, severely overbought. But this is more of a fundamental move for Best Buy. For a while there, they were almost pricing in bankruptcy. Okay, I guess it wasn't that bad, but they were pricing in some ugly action here for Best Buy, and it continues to fly higher. If you're trading Best Buy higher, just use the 7 and go. The Bollinger Bands are starting to contract on Best Buy, so I'm not sure you're going to get a real strong move right here without a little bit more of a consolidation, especially from such an overbought position. Yeah, Max, Boeing, and this is Boeing is we see this chart out there with a lot of other things. This little tri-star pattern, and it's not bearish except for in the real short term. Okay, it's saying, hey, you know what? We're probably a little due for some sort of pullback. MFI is above 80. Like many of these, Boeing has surpassed many of its price targets from the standpoint of technical price targets to hit. Went above 120, 130 is about the price target there, and now starting to show a little weakness. It's a tough one to get short. Okay. If you're long, use 130, and if you're looking to get short, let it break 130, and you can probably get a pullback, to 125, 124, depending on how much the market itself pulls back here. You have things like UTX, a very similar pattern. This TriStar, and if I was going to short something, I'd rather short UTX than Boeing. But similar thing. The only difference is Boeing is doing it from a much more overbought position, where UTX is doing it more from a consolidation position. So your two arguments are, well, I want to go after the overbought one because it'll pull back harder, or do you go after UTX because it's underperformed? So there's an argument either way, but both of them with the same type of pattern setting up. I would want to see both of them break below the 7 to kind of go after them. Even Triple M doing something similar here with Triple M from a severely overbought position. Okay, whatever oscillators you throw on these things, they're just incredibly overbought. Alrighty. Well, we'll be going through here. I want to get into a setup here. If we see this market here, kind of trickling higher, if we start to see it break down, the one thing that tells me, hey, you know what, maybe this market will still go lower today, is because it didn't hit these lows on major volume or 20K volume. But the overall price action so far today is symbolic of what we've seen in the market pretty much every day, every single day here. So Marathon to the upside, Costco, Kihu, all potential upsides, and then some of the downsides on Bank of America, Intel, Ford, Goldman. And again, we're just kind of looking for the ideal setup here. And to say, okay, you know what, where can we have a real good risk reward point? And being Tuesday, I suspect we will see that as the day progresses here. All right, well, thanks for hopping on. Any questions, let us know, and we'll talk to you soon. Take care.